All right, so let's go back here. Remember, and here is where your weekly cycle crossed up, where you can buy dips on your daily and dips on your 4-hour, right? And then here is where the daily finished an engulfing setup with a stop below here. And now we can see your bands on your 4-hour flip bullish here, and you made a higher high right here. So at this point, you can be buying 4-hour dips as well. All right, so let's check this out. All right, your 4-hour cycle crosses up here. You got a bottoming tail setup right there. Also an engulfing setup slightly prior to the cycle cross. Stops below there. If you're trading the 4-hour, right, here's where we have to start getting some distinction, guys. Either you're trading the 4-hour, meaning I'm going to take 80% of my size off with the cycle crosses, or you're using the 4-hour to get an entry on your daily, in which case you're trading daily cycle crosses. Okay, I know that's maybe a little confusing, but you want to, be set on one or the other. Either you're trading just that time frame, or you're using all three to give you info about one. Okay. So in this case, we'll assume you're using the 4-hour to get a better entry on the daily. All right. So let me go into detail a little bit here again. I know I've said the same thing like 4 or 5 times. I just want to make sure I'm clear. Okay, because this is how we analyze this, right? We look at our weekly. You say, okay, our weekly cycle crossed up here. We've got higher lows, higher highs on the daily. This is the point where I want to be buying dips on the daily and on the 4-hour. Okay. Once our daily gets about below, I'd say halfway on the cycle, right? Halfway is 40. When you get below halfway, you can start to be looking for dips on your 4-hour. Okay. Because if we catch the 4-hour cycle cross, remember, this is from here to here is one daily cycle cross, but you might have a bunch of 4-hour cycles that make that up. And then the one 4-hour cycle, that's the actual bottom of that daily cycle. Make sense? Okay, we want to use that 4-hour cycle to catch, the daily maybe in here. So let's go check it out again. I know I zoom out a lot, guys. It might be a little hard to follow, but if you can't look at charts real quickly like this, again, you might just need more time looking at charts. All right. So let's keep in mind here, at this point on the daily, you've made a higher high and higher low. So you're buying 4-hour dips. And it was like this point where your daily cycle was getting nice and low. So now these engulfing setups, right? Or delayed engulfing with your cycle crosses, those are buys now on the 4-hour with your stops below. Okay? Because you're doing it in anticipation of your daily cycle crossing. Right? And then if you take a couple stops, stop yourself out and wait for the daily cycle cross for confirmation. Because sometimes you'll have, if you recall, we're buying these 4-hour dips when the daily cycle is around here, right? It's below halfway, but it's possible the cycle goes all the way down. And so you don't want to be buying dip after dip after dip after dip, getting stopped over and over and over and over and over again. So sometimes maybe if you buy, maybe you bought this dip, you got stopped, and then maybe you bought this dip here and then you got stopped again. Maybe you just wait for the daily cycle cross then. You won't get quite as tight risk reward, but you're still going to get a setup and you won't have to take loss after loss. That makes sense, but moving on here. And the idea of that is if you don't want to get stopped a bunch, wait till your daily cycle crosses, which happened in here, and then you can buy 4-hour dips after that and engulfing setups, so on and so forth. Okay? Same thing goes here. Look how perfectly it holds the bands. Cycle dip. Engulfing setup. Stop below the low. Maybe you get wicked out. Wait until your bands are back bullish. Okay, and then you can buy the next cycle dip, which was right in here. Okay. ride that up. If you're trading this, just trading the 4-hour time frame, whenever your cycle gets high and crosses, you want to take some profits. But if you were just using these dips to get better entries on the daily, then you want to be trading your daily cycles, right? Okay, so if you use your 4-hour to buy these daily cycle dips, then maybe you wait until the daily cycle gets high, and then you can take your exit on the 4-hour again, right? Is this making sense, guys? So when your cycle gets low, you can be looking at your 4-hour for dips, buying those 4-hour dips, and then if the daily crosses and makes a pivot, a candle setup, then you can keep your main stops for all those 4-hour dips below that daily pivot. Okay, and then whenever the daily gets another candle setup, you can raise your stops on all your 4-hour stuff. Right? And then when your daily cycle starts to get high, right? Let's look at this. Your daily cycle started to get high in this region. That's when you start to look for exits for profit taking, because remember, you want to be out 80% of your size on the cycle cross. You start looking for that when your daily cycle gets high. Okay? And check this out. Nice, huge run up. A BCI with this engulfing, right? You guys see that BCI, another BCI. Both of them get follow through. And then you get a topping tail plus a bearish engulfing setup with a massive cycle cross down. So now you're taking huge profits off right there. And let's look at that on the daily and see where that is. Did I miss it? Yeah, it's back here. It's such a small circle, it's hard to see. Check this out. Look at that. That's where the 4-hour gets your exit. Right in here. As opposed to the daily cycle crosses right here, which is about down here somewhere you're selling, which is still great profits if you're in down here from the cycle cross. Great profits. But let's see, that's 9 to 10% lost by not using a lower time frame to trade to your advantage. Right? Yes. See that? Mind blown. And then after your cross, you don't want to go in and you don't want to go in and buy the first 4-hour cycle dip. Okay? You want to wait. There's gonna be a bunch of 4-hour cycles throughout this dip, and then once your daily cycle is back below halfway, more favorable position, you can start buying candle setups and cycle dips on the 4-hour. Okay, and that means maybe sometimes you don't catch all the daily dips, and that's fine. You don't have to. You don't have to catch every move. Patience often will be your best friend. All right, and so then once your daily bands are bullish, you can just be trading your cycles around those, keeping in mind your long-term game. And with that, we'll fast forward to where this market fully breaks down. All right. And we've got two kinds of breakdowns. Again, we have lower highs, higher lows. We have our trends and our pivots, all that kind of stuff. And then we have our pi cycle. Okay. And we can see we have this idea of when price is above pi, you're in a bullish market. And so it honestly, back here, it made sense. It made sense to stop out on some longs when price broke down here. Sure, it ended up being the absolute bottom, but you didn't know that at the time. You broke long-term trend, right? And then once you recovered, even if you sold, you can just hop back in and make money on the long side throughout the entire trend, right? And once you get below pi, you're not bullish again until you break above it. And as we've seen here, right, that doesn't mean we can't trade long because we're not bullish. It just means the overall trend is not bullish until you're back above pi. And then when you're back above pi, you are 100% fully comfortable buying dips, right? And you see here, we broke below pi, but it wasn't like the end-all be-all, right? You break below pi, you get back above it, you can start buying dips again. Get back below it, start shorting the rallies. Not super tight, right? This is not a big deal. And even this is not that big of a deal, right? We're not just going to open a bunch of shorts because we're below it, but it's just another indicator, right? And then when you get big distance away from pi and price, it's likely at some point we're going to see a pullback back to pi. All right, markets just ebb and flow to it. And we can see after a long period of time of not flowing to it, price whiplashed heavily below it. Okay. Do keep in mind though, pi and the 200 are more important in trending markets when they're kind of distributing. That's why these aren't as accurate, okay? And these markets are kind of distributing. They're not as accurate. Okay. But now let's look on the weekly, our higher time frame. Once we broke down here, okay, at that point, we can start selling the rally on our daily, our main trading time frame. Right? And so we can see here after this point, we can start selling rallies. All right, so we get a cycle across right in here, can make some sales. Okay, cycle across here, and then you cover, and by cover, think about it this way: when you sell, you sell $100 of Ethereum, you're minus 100. If you want to cover all that back, you're buying back 100. If you want to cover half, you're buying 50. Some people get confused by that term cover. It just means to buy back, right? If you're long, you quote cover by selling. And if you're short, you cover by buying back, all right? So sell some with the cycle cross. And again, the same concept of using the 4-hour applies, right? If we check out here, when the actual cross occurred, all right, that has you selling maybe in the 285 area. But if we look at the 4-hour, once our daily gets above, we're say 40 or so in this region, we start watching the 4-hour and see if we can sell some rallies prior to that cross. Okay? So we see at this point is when our daily cycle is starting to get kind of extended and we start watching for big cycle highs, which we get across here right into a bearish engulfing. Enter that setup, stop above the high, and that saves you. Well, here, let me go to the actual bottom of the setup, which is this bearish engulfing. That gets you an extra 4% on your entry. You do that 10 times a year, use that 4-hour 10 times a year, that's an extra 40% minimum pretty much. So not that this was a bad entry, right, on the daily. That was fine waiting for the cycle cross. But if you can catch it, maybe you enter a 30-year size on the 4-hour and then the rest here. Now you've got your average kind of a little bit higher, right? And so you add that percent split into your risk management too. Maybe like I said, maybe you only trade 80% with your daily cycle cross and then you use 20 or 30% or something with your 4-hour. Or you can also have multiple separate accounts. You can trade the 4-hour cycles. You can trade daily cycles. That's one thing that I really like about this model is you can really mold and apply it to your own style of trading. Right? It works for day traders. It works for swing traders. It works for core traders and long-term investments. It works in Forex. It works in commodities. It works in equities. It works in crypto. You go where the money is. All right. And this same concept I'm teaching you, all these concepts work in other markets too. All right. But let's keep looking at this. All right. Remember your weekly broke down. So we're selling rallies. Let's look at the daily cycle highs. We'll look at 2 more. All right. We'll look at this one and we'll look at this one and we'll mark again exactly when they've crossed there. And again, this is not a cross right here. I know it's getting, quote, high, but it's not a cross until it actually crosses. Okay. And now it looks like we're coming into another one pretty soon here, getting back near the bands, near a big pivot, near this BCI. Another good short opportunity coming. So we're going to be watching the 4-hour very closely as we come into pi here. Check this out, guys. Another staple in the model. When you start making a higher high above the bands, price cycles to the 200 and or pi. That's just how the model works. And so it makes sense if you go straight up here quickly, it makes sense to book some gains there. All right. And because our daily cycle, remember, our daily cycle is basically looking like this right now. So we're going to be looking to short this next breakdown on the 4 hour if we get a bearish setup, right? Our 4 hour short term is in an uptrend. So what could that possibly mean on the daily? That could mean this is the bottom, right? But it doesn't mean price is just going to rocket, right? Price might have to come and put a higher low where we can watch some fibs at the 0.5, 0.618, watch for a candle setup. And if our daily comes, whoa, we don't need that. If our daily comes down afterwards, starts getting below halfway, then we can look at the 4 hour and see if we're getting some candle setups for a higher low. But for now, the daily is still in a downtrend, right? You're still long-term bearish. Remember the weekly? Let's check out the weekly again. Well, we don't even need to. If you guys remember, the bands on the weekly are going to line up with pi on the daily. Okay, so this is the top band on the weekly, give or take. I'll show you guys just to show you, give or take. It's not exact, right? They're just areas, but it's pretty close. We can visualize what the weekly waveform bands are doing, and they're going down. They're sloping downward. And your daily bands are sloping downward. So you're still in a long-term downtrend, guys, which means on the 4 hour, when we get moves like this, right, we want to be booking some gains and looking for shorts. All right. I got kind of hyped up in the moment there about current price action, but let's look again at these other two cycle crosses and look at how we can use our lower time frame to get a better entry on our higher time frame. Right? Okay, so, somewhere in here, your daily cycle was getting above about halfway. So you start watching for cycle highs. Boom, you get a cycle high. Topping tail setup right there, confirmed by this candle. There's your entry, stop above the high. All right, and the daily cycle, cross would have had you out somewhere in this region, which is, you see where the exit is in the 4 hour? All right, that in this case is about 10 to 15% of a better exit, exiting on the 4 hour than on the daily. Right? Now let's look at the other example. So cycle cross down here on the daily. Your exit is right there, pretty solid. And by exit, I mean short. Right? On the 4 hour, the cycle crosses right here. And this is a case where you might have had a stop and it might have taken you 2 tries to get it, right? Where you enter this engulfing on the cycle cross down and get stopped out, but your daily cycle is still high, so you're still looking to catch that short. Wait for the next cross right there. Bearish engulfing plus topping tail setup, new stop above there. And boom, you caught the high, plus you caught the high of the daily cycle. And then you come back to your 4 hour to cover. Right? This was the short here. You come back when you see your daily cycle is getting below halfway, which is this here region. Then you start watching your 4 hour dips to cover. And really, a staple rule in this model too is when you make new lows, you cover, right? Some people buy or sell breakouts. We don't. We cover. If you break out on the long side, you sell some. If you break out on the short side, you cover some. That's just a staple. You'll never lose that way, right? If it goes a little bit further, you only sold a little bit. If it comes back, then that bit you sold, you can add back on. Okay. So here, like I was saying earlier, at this point is when your daily cycle is getting kind of low. So in this region, you're looking to be covering on these cycle lows. Right? And then when you get a cycle back high on the daily, which is what we're getting now. Right? So you shorted here, you cover on the new low, you cover some more, Right? Cover a lot when your daily cycle crosses back up. And cover a lot with the 4 hour dips when your daily cycle is low. Okay, and then, you can play the contrarian long when you get a setup if you like, but we're in a downtrend, so I prefer just to short the rallies. So now you can short the 4-hour cycles coming into this high daily cycle. And we have confidence in this short because not only is it in the direction of our daily, it's in the direction of our weekly trend as well. So the only trend that it's slightly contrarian to is our 4-hour while the bands are in an uptrend. But until you break your main pivots, right, we need a few days above this level and back above pi. If we start breaking out above there and making another higher low, something like this, then maybe we start considering going long again, because that would mean getting above the daily bands. And if you get above the daily bands, you can cycle back to the 200 and or pi. Okay. But for now, that's not happened, right? This is still resistance and your cycle's high. So we would be looking to short here, right? Is this making sense, you guys? Right? We've been looking at Ethereum this whole time, but we'll take a very, very brief glance at Bitcoin as well. Same thing goes, right? When you're in, check this out. You would want to be short basically this whole time on Bitcoin until your weekly bands flip back bullish, which they do here, and then they're rising again and prices above it. At that point, you can buy dips. You can buy dips all you want throughout this entire bull market. And then when you break down below your pivot and your bands are bearish, you're back short. And that's what we've been doing. We've been shorting the rallies on Bitcoin. And so now we're seeing some nice price action, a big engulfing setup, a low cycle. But the risk reward is going to be shorting cycle highs and price up here as opposed to buying cycle lows. That doesn't mean you can't buy down here, but we'll see as we go to the daily, just like Ethereum, you're buying a trend that's making lower lows and lower highs. And that's okay, but that's not the best way to make money, truly, right? If we start making higher highs above the bands and we make a higher low, then you can maybe start buying some dips until we get to the 200 or pi. All right. And just like Ethereum, the only trend that's bullish right now is the 4-hour. Okay. Because the 4-hour is rising. So you can be playing maybe day trade longs, or you can be playing longs with your 4-hour cycles. But if you're trading the daily, you just want to be waiting to short when you get a daily cycle set up. When your daily cycle gets really high, then you can short the 4-hour. Same things we discussed on Ethereum. All right. Whew, that was a lot, huh, guys? I know I talked about a ton in this video. I rambled on and on. If you guys are not following or you want me to clarify more, hit me up. I will make a brand new short video just for you if you do not understand this, okay? But that's going to wrap it up for now, guys. Please consider using multiple time frames in your analysis. If you can get past the initial confusion, you can really step up your game to the next level, okay? So that's going to be it. I'll catch you guys in the next video. Peace.